Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, May 3rd, 2019. This video will be pretty much just a follow-up to the video earlier today that I put out by members. Most of the same, except in that one we covered oil, gold, silver, the US dollar, a lot of other things that stand out right now. But as far as the broad markets go, even though we continue to build on the gains earlier today, for the large cap stocks, it was a non-event. Technically a non-event, so meaning nothing happened. We had a nice up day, nothing huge, a 1% gain. Obviously, you can't say that's bearish, but it didn't do anything technically. Right now, you can see we're still. The SPY closed right at about that 294-ish level, which is where it peaked out right here back in September 18. We had a high of about 294 back then, and that's where we've been failing recently, including the bearish engulfing and bearish engulfing candlestick from Wednesday. So we closed below that. Again, up day, we'll have to see what happens next week, but nothing has changed technically. It didn't take out the divergences. We're still, coming off overbought readings, and again, we're still above resistance, or slightly below resistance, I should say, really the previous highs, and we're below that trend line on SPY. QQQ, same story. Strong day in the Qs. Up about 1.6%. But again, as far as technical developments, nothing there. We have a big green, an up candle today, but it's still below the recent highs. It's really within this boxed range here. So certainly potential to go either way next week. We'll just have to watch for a break. Really, that range should be like that. That's the recent trading range over the past, what is that, almost 2 weeks now, a little less than 2 weeks. And again, we had the breakdown. Back test with an impulsive red bearish engulfing candle on Wednesday, and we're just below the bottom, just below those highs on Wednesday, came almost about to there. However, we did have a technically significant event, and I said this in the video earlier today. What I did with my, I'm short the Qs, and I hedged up via the small caps. When things started to look good this morning in the pre-market session, things were moving up. And this is where I said you'd have more bang for your buck, I believe, than the Qs or SPY, and that was the case. When you look at the 1-minute chart, from that point where we did the video, IWM from there outperformed both QQQ and SPY. Why? Because it was a breakout. That was a technically significant event. Here's that level talked about. So what I basically said is, if you missed the video this morning, that if the market is going to break out the new highs, I'm talking about the large cap. If they're, I'm talking not a marginal pop where, CNBC parades out the cheerleaders and says a new high in the S&P 500 intraday. No, I'm talking when you get a breakout to new highs, you'll know what it is. A big, it doesn't have to be a single big day candle, but you do want to see impulsive buying, and you want to see prices clearly start to walk away, not just flirt and test with the previous highs like they have been doing. So with that being said, if the broad markets can break out to new highs, I think you're going to have more bang for your buck in the small caps. So they broke out today. It's an impulsive green candle up almost 2%. And again, it's this 159.41-ish level right there. Failure there, failure there, failure. So that's the level that we've been watching on IWM, and it also sets up a sort of looks like an inverse head and shoulders pattern here. Let me change the colors on these lines. Okay, there we go. I had just wrapped up, members of the site, if you're watching this, I just wrapped up a video covering the international markets, the major global indexes, as well as the U.S. markets, and some charts that I haven't shared before. So that video is actually just been uploaded, and it's processing at YouTube now. I'll get that out as soon as possible. But this is a potential. Now it's not the problem with it is that inverse head and shoulders, which I just drew there, are supposed to be bottoming patterns that come after a prolonged uptrend. They don't. This doesn't really fit. There was I meant to say prolonged downtrend. What we had here is a drop, so it really doesn't fit in there. But for all intents and purposes, it's the essence of the fact that the pattern here is that you've been tapping on that 159.41 level, and now you broke out. So that's the pros. And what makes this breakout a little suspect, just like the broad markets too, if they break out to new highs next week, is that you have the divergences. Now, again, they can be taken out. We can certainly move up like this. PPO could move up here and take out the previous high, and then you no longer have divergence. You will be overbought. I'll tell you, if it does that, you're going to be overbought. And last time we were overbought, you can see overbought there. You usually get the corrections after overbought levels, especially with divergence. And that's what you have here. So there was a divergent high right there, divergent high right there, and these are your corrections. So keep that in mind, and just watch for a reversal. Breakout is good, and unless it fails. So right now, if we come back in next week and we take out today's candle, we move down there, watch this trend line. There's an uptrend line to watch right now. Quite a few reactions, and that would be bearish, and that would show a failure of the small caps. Otherwise, like I said, it's markets can go either way. Still favoring the downside resolution, but we'll have to see what happens next week. And if they do continue higher, or maybe even let's just say the S&P and the NASDAQ 100, the large caps consolidate, tread water for a while. Maybe IWM wants to play a game of catch-up. So if you are bullish, I'll make it very clear, I think there's more upside in the next few months if the market continues to go higher. More upside in the small caps than the large caps, and but they're both all of those are in precarious technical postures right now with these divergences and overbought or near overbought conditions. So like the small caps, on the large caps, watch for the same thing. We've been testing the highs. If we pop the highs, we popped them briefly, but we had that pretty sharp rejection the other day. So if we do pop them, look for a failure. I would say a failure back down below this level here. These two lines here. This is a support zone because you had some trading here. We went up, we popped above there, right there. We had a previous reaction high. We took it out, and that's where we failed. And we're back above that level now. So here's a recent cluster of candles. You can see we had a gap up to break us out above this level. So if we do, anything happens, whether we pop out above the new highs or fail here, watch for a break at that level, because that would most likely open the door to well, like I said, maybe some waterfall type sell-off, or at least accelerate the selling. So we'll just have to watch. Here we are, same story we've had for weeks now. The divergences, the market's going back and forth. They certainly had the opportunity, the bears did, to follow up a little more aggressively on these bearish engulfing candles that you had on Wednesday. We had follow through red candles, and then boom, a green day today. So like I said, we didn't take them out, and from this chart, nothing has changed on the technical posture. Look at NQ, same story. This is the NASDAQ 100 futures. And you can see the trend line off the lows on December 24th, and nothing's changed there either. I'll zoom in real tight. We broke down last week, or earlier this week. We back tested, had an impulsive move down. We've been stair-stepping lower, and one thing to note, and I pointed this out in the earlier video. Let me grab another chart here. So this is that's the small caps. Let's go to the large caps here, and let's look at a 15-minute chart. This is what I pointed out earlier. I think it was in the trading room today. A downtrend is simply defined. If you look up the definition, it is a security making a series of lower highs and lower lows, and that's so far what we have here. Now, I will say The small caps are, this is just a near-term downtrend. This is a NASDAQ 100, and it's, just a slightly, we finished, well, since I've started the video, we've about matched those highs. We haven't taken them out. I'm talking about the previous reaction high. There we are, or almost to that previous reaction high. So the near term, this is just a near term downtrend, is in jeopardy. Sort of forms a megaphone type pattern. Small caps, the near term trend is up, and of course they broke out today. The S&P 500 is a mess. This is what I'm focused on. And then to wrap the video up, since I already covered a QQQ, showing you no changes there. Same with tech. Remember, tech broke down, finally took out the trend lines this week. We had a red candle there with a close below after closing right on it the previous day. So that was Wednesday. Bearish engulfing candle there as well, red candle. And you can see tech underperformed. Not by a lot, but it was only up about 0.95. Still a decent rally, but as you can see, it's still below the trend. So, I take the charts for what they are. I take it on face value. If we saw this today, if we went back up above there, and back regain that trend line by a fair amount, then you could say that's a failed breakdown. As of now, we can still back test, because we haven't even had a back test on XLK. This is what I was waiting to see break down. Well, I take it back. Depending how you put this line, we may have immediately back test, but remember, sometimes you come in, you back test, you pull back, you come in, back test again. Let's just not try to make too much of it. We'll just have to see what happens next week. Was this a one-day wonder today, or will we follow through to the upside? So there's the recent trading range, a lot like QQQ and SPY, about the last week and a half of trading. So let's just see where we go from there. And more green candles can take us up for a back test, but you don't want to see much more than that, because that will then cause, especially if tech does this, you're going to take the market to new highs. And then you may see some buyers step in. As of now, it's kind of been a stalemate for the last week and a half or so as the broad market tests those previous highs. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.